I think one of the issues here is people have failed to look at the fundamentals of SVB, and essentially the challenge they had was a mismatch between their lending and their deposits. And that's just not the case in most of the European banks. They have a much more diverse deposit base. So SVB was pretty much concentrated on technology, life sciences, and indeed the VC growth and buyout funds. Go across to a bank like BNP Paribas, and it's got retail deposits, it's got wealth management deposits, much more diversity. So the European banks are fundamentally different to the case of SVB.
Fascinating. So I suppose, if that's all true, everything you just said, these European banks must look pretty attractive at these levels.
Yeah, I mean, that would seem to make a lot of sense. I think there's still a lot of concern in the market, and some of that is driven probably by misunderstanding and a lack of perhaps basic bank math to understand what's going on the balance sheet. But certainly when I look across Europe, and indeed a lot of the US banks, I know there's been some concern about First Republic, but even in that case, we see quite a different picture in terms of their balance sheet.
Are you saying what we're witnessing in our markets is an overreaction, a knee-jerk in terms of the selling as investors and depositors take flight in some situations?
So I think that's the case. I mean, a lot of people have heard certain words, I think, focused in on the banks. So people looked at, what are the unrealized losses, focused in and looked around at different bank balance sheets to see that without perhaps realizing that it's only in a situation of stress that banks might actually have to sell some of those assets and then realize those losses. At the same time, we need to remember that some of this is also down to rising interest rates. And fundamentally, every bank needs to have a very clear business model that is sustainable across the cycle. Now, in the case of SVB, we had a business model there that was focused on one client segment, a business model that very much relied on that client segment, which was perhaps more flighty than many other client segments, and a failure to manage our assets and liabilities. So, at one end, you see the interest income went up about 72% versus full year 21, whereas the interest expense was going up 10 times, a fundamental mismatch there. And that, we look across at the European banks, much more stable. And as I said, the same applying for many of the US banks.
It's not unusual to have banks that are very specific in some areas. I mean, we've seen it in agriculture and farming before. This happens to be a bank, SVB, that was focused on technology. It sort of exposed the system that if this is such an important area of the economy, we need to have other lenders, other banks active in that sector. Yet it comes with high risk and it doesn't fit the profile, the loan profile of some of the major banks. So how do we ensure that this is a sector that is adequately capitalized in future? Who steps in?
It's a really interesting question, this. So if we look back at many of the banking collapses, go back to Lehman or Bear Stearns, one of the issues for Lehman and Bear Stearns was that a significant portion of their income was coming from the MBS market. So they had this concentration risk in their business model. Underpinning that in that case was essentially a bet on the US housing market. In the case of SVB, we have the same situation where there's a concentration on a given client segment and a business model that was reliant on, frankly, low interest rates and being able to manage that. So I think this is one of the most challenging areas for regulators to look at. But at the same time, this is the job of most bank boards. They need to really understand their business model and what's driving that and really getting behind what the risks are rather than necessarily just doing the tick box exercise to ensure they're meeting all the regulatory requirements.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.